Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on RPHM. They had a failure on the study, but we are positive regardless of the 83% drop.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
All right, we are live. Johnny, how's it going?
Yeah, good man.
Welcome.
I'm getting posy in the Christmas spirit.
There you go. Looks like I have part of my spreadsheet in this camera here. I have to adjust the camera a little bit next time. I don't know why this camera view's got this so expanded, but whatever, it doesn't matter. All right, how was your week?
Yeah, been good. A lot of green stuff in the market. We have seen some pretty crazy gains, right?
Yeah, everything seems to be touching all-time highs. So, yeah, we might as well hop right over into the dashboard, right?
Yeah.
All right. So, just a quick, I had to make some edits on one of my tables in this. So, I just noticed this morning that some of this conditional formatting is wrong. So, this isn't supposed to highlight green unless it's over 2.5%. So, don't think that these are all super bullish. They're not. It's kind of deceiving. So, I just got to go through and fix that at some point. But, I mean, this is from the end of Friday, which it didn't look like too much move. Shipping was a big move, and I know I saw on Twitter or X. I always still say Twitter. I don't know if it matters, but someone had posted that the two biggest shipping companies had said that they're avoiding the Suez Canal, I think, area. So I imagine that just increases the cost of shipping a lot. So I wonder if that's why it got such a bullish rise. I don't know if that comment had anything to do with what's actually going on, but I did notice that. Did you hear anything on that?
No, I didn't. But that makes sense though, and I'm just going through on my end also to check a little bit. But the day before, like Thursday, I think the colors on your sheet right now would be accurate because everything was up almost.
Oh yeah, whatever. I checked it Wednesday, or I think it was the day actually you had streamed, maybe on Thursday, and yeah, everything was green. It was, yeah. But you know, with the rates coming back around, or possibly they're talking cuts, it's so crazy. Yeah. Everyone like 2 months ago would have been pricing in possible price raises, and now we're all like, oh, now they're gonna start cutting now, you know.
Yeah.
But it doesn't really surprise me.
No. Did you look into the palladium charts?
No. Why was it way up? Oh, up 5%.
In the last week, yeah.
Let me see what it looks like on a 3-year. Yeah, I wonder, is there news on that?
I just saw that it had like many days consecutive that it was up, so I have not checked the news.
UK sanctions target Russia metals. So it looks like there's some sanctions against palladium from Russia.
Okay.
What is this person saying? So it says they slid below 1,000 an ounce for the first time half a decade. This came despite reports of sanctions on the largest metal refineries in Russia, and even as forwards were aggressively borrowed. Oh, okay. I guess we're done reading that. Either way, okay. So I guess there's some sanctions, which is probably now reversing some of this steep downtrend from what's it called? I don't know why it's getting so cheap. I mean, maybe it's just not being used as much or something. I mean, it seems this is a pretty long drop. This is a 3-year drop.
Yeah.
Either that or it was massively overpriced here, but I don't know. I don't know the supply and demand of palladium by any means. So, like, have you ever looked into it? I don't even know the companies, like the players in those companies and who controls all that.
I am not. I didn't even. Like you said, this is a long drop, and I have not checked into that before. So, but maybe with this recent uptrend, maybe we should like actively seek for some companies in that sector.
Yeah, I would be curious. I don't know if that has all to do with the metals and metals and mining, or if it's more on the refinery side where they get that out of something else. You know.
Yeah.
That would be an interesting one to delve into at some point. Maybe we. You know, that's another thing too we could do on the streams. If anybody's interested too, you know, as Johnny and I go through all our daily movers and stuff like that, there's gonna be times where we're caught up or stuff's just not really popping out. So, you know, if you only have 2 or 3 tickers that you look at on a given day, you can kind of fly through those pretty quick. So we could probably look at big moves, like for instance when palladium moves like this, and then we could go in, figure out what companies are involved in that, and then kind of trying to understand that industry a little bit better. You know, maybe find a play that way, because definitely if you understand an industry, I mean, not only does it help to obviously just find plays if an industry is churning around, but within that industry you're able to compare the different businesses, really see if one of them's cheap versus its peers, and figure out why it's cheap. Is it cheap for no reason, or is it cheap for a good reason? You know what I mean?
Yeah.
So we can probably do something along that. The other thing too, if anybody's really paying attention, you're gonna see that the daily movers that I have here are actually from my Wednesday still. I haven't gotten through all these guys. I apologize. I will always trying to keep up on it, but sometimes it's just tough with the week and how much time I actually get to look at stuff. So I have, if we get through all this stuff and we want to keep going, I have it where I can update it. We can see everything that moved yesterday on Friday at the end of the market close. We could start looking for some of those tickers too. But Johnny, you said you sent me a list of a few that you want to still go over from then too.
Yeah, from Thursday that I didn't get to do because I run out of time. It's a bit late when I stream on Thursdays here where I live, so I can't stream till I'm like finished. But
right.
Maybe we get some time for them today. Yeah,
and you know, just in terms in general, I feel like over timing, the streams have been landing at about 2 hours. That seems to be kind of the norm. I'm sure some days it might go a little bit later or a little bit quicker. It just kind of depends, and we're still working on, you know, our time schedule and figuring out exactly when we can stream and what makes the most sense. Like for instance, today we really didn't get up until about 7, at least Eastern Standard Time. So
yeah.
If that's kind of starts to just become the norm, I mean, we'll just change it to 7, so then that way no one shows up waiting and thinks it's going to be on. I know it's early for in the States and whatnot, but you know, if anybody from Europe or not that everyone in the States doesn't want to wake up and see this. I know that's not the case.
We will also, if we end up changing something, we will make sure that we update the information on the channel and on our Twitter account and all that. So if you follow us there, you can just like pay attention to the times there.
Right.
And by the way, Europe needs to wake up. We saw in our data analytics, we only get traffic from USA. What's going on, Europe?
Way to call them out.
Yeah. Come on.
Yeah. I mean, the only thing is we got to be careful when it does spread. We don't want to get too big too quick, you know.
True.
It's tough to have all those kind of issues. But all right, so like I said, I've already selected some tickers out, so we can honestly hop right over to fundamentals today. I do have to just update real quick here, so I'll just kind of update as we go here, because honestly it won't take too long. Did you see anything? I know we had mentioned EML, Eastern Co. is one that we liked kind of from your stream. Did you see anything else? I wasn't able to stay for the end of the stream.
Like this week, I've actually had a few in my tracking that has gone up a lot in a matter of just 1 or 2 days.
Gotcha.
So it's a bit painful that I have them in the tracker, but I'm not in them. I think Battle was one of them yesterday on news that they are being bought up.
Yeah.
Which isn't so easy to predict, like if someone is going to be bought up or anything like that, but it would be nice to have a position there. It was almost a double in a day. Yeah,
actually, I do want to pull up Battalion now that you're mentioning them. I want to pull them up just so I can check news real quick, because I've looked at them before. I didn't put them on deck, so it wouldn't have caught my eye anyways, but I think that's part of refining your process, because if this was possibly an S&A acquisition, was there any kind of news story or something like that? Because if someone had mentioned that before and I missed it, that's something I got to work on. You know, I got to really, you know, and maybe it really did come out of the blue, and it would have been pretty hard to predict unless you're an insider. But either way, just one of those things that when I miss something, you know, I'm always trying to pay attention to it, because
Yep.
I do remember they had pretty good cash flow. Simple free cash flow is low, but you're going to see that a lot in these kind of things, because these companies are actually, usually when simple free cash flow on these kind of things are low, it's actually a good thing. It means they're spending a lot in CapEx, and hopefully in the future that's going to turn into future earnings, whether it's oil companies or mines or something like that. Typically, actually, that's when they're at their best. And a lot of times, actually, book value kind of looks worse on some of these companies when it's the best time to buy them cyclically, because they took on this debt to expand and build out their company and grow. And then as it starts to come to a better valuation, they pay the debt down. That's because they're already earning money on what they spent, you know. So you almost want to get these ones when they look like they're at their worst, but you always need to make sure that they are still generating cash flow. And then it's looking into the different oil fields and what the average rate of return that they expect from the different things are. But my real thing here too was just to see if there was any news. Or, you know what, actually, I should probably pull up Seeking Alpha, because that might have been where someone would give a hint a little bit beforehand. Whew, 81% one day.
81. Yeah.
Continues to add preferred equity. Elephant, he was on it.
Yeah.
Issues 38 million in preferred. So it was the preferred probably would have deterred me anyways.
There was a few things that obviously made me not go into it, but I looked through my comments now, and I think Oak Tree is also involved here.
Yeah.
In some way. I don't remember too much about it. I would have to pull it up again. This happened yesterday, so I just saw it yesterday when it was too late, you know.
It's funny too. You look in the comments and these guys are like, "Oh, it's dying." Actually, we got bought out, and shareholders did very well.
Yeah. I had also noticed that there was a lot of negative comments about how heavy the debt was in that company. So there was some risk and some worries about it.
Well,
so
speaking of that, what we got for debt here? Yeah, but this to me doesn't look that scary. I mean, it's 50%. It is high. Don't get me wrong. It's not like it's not high, but I mean, they do have cash. They're generating cash. I mean, their earnings does get eaten up, so it's not like it's always really they've had the one positive year here, and obviously
I should add though, in my comments, I also came to the same conclusion that you. I said depth is a worry according to some Seeking Alpha articles, but I don't think the depth is an issue. So I wasn't too worried about it either, but I know the sentiment was a little bit negative towards that.
Gotcha. Yeah. And that's why, you know, if when I see that debt, I always want to just pull up the SEC report. So there, what is this? Why sometimes they do these out of order? I don't know why it does that. Yeah. So liabilities from derivative contracts, current portion of long-term debt, and then asset retirement obligations. Does it say what that is? Carrying amount of liability for an asset retirement obligation. Asset retirement obligation is a legal obligation association with the disposal or retirement of a tangible long-lived asset that results from the acquisition, construction, or development, or the normal operations of a long. So that must have to do with if they have leases on it. My question here too is to see if how much of this is leases or what is it something else. And I will say that I would start to probably stack because these are convertible. So because it's convertible shares too, you have to pay attention because I find like preferred's not usually my favorite thing. I mean, if you read security analysis, you should understand that the reason why preferred, unless preferred really is on sale, it's one of the worst things that you can buy in terms of just overall structure because it loses the benefit of being a bond where you're guaranteed to get your money back. But it also doesn't have the upside that stock has. So you're lowering your overall gain from getting preferred shares. So really, the one time or the two times I see preferred being interesting is for some reason if it's just really cheap. Sometimes preferred just trades super cheap, and even though, like I said, it's not the best kind of security, you can still get great deals on preferred, and it can become interesting in those situations. And then the other one's when it's convertible. Sometimes the conversion rates, if you're paying attention and you just figure out the pretty basic math, you can find some interesting opportunities. Although I don't know, have you ever bought preferred?
No, I haven't. It quickly gets a bit complicated for me when you start to talk about like stuff like that.
Gotcha. Yeah, and
I understand that there's something I need to look into there and learn more about.
Yeah, and I told Johnny too, and I give Johnny a lot of credit because English is not his first language, and some of the finance stuff is just thick. And I've read Security Analysis twice, and it was one of the first books I read when I started hopping into investing because I knew I was interested in value investing, and you always get these recommendations that Security Analysis is like the Bible of value investing. But to take that book on as one of your first books, the first time I read it, I might as well have just not read it because I didn't understand like any. The second time I read it after I had a little bit more of a background, it was like light bulb after light bulb going off. So I do recommend it, but not as your first, even close to your first book into finance. You should get some basics down. And because I remember the first time I read it too, the first huge chunk of it's on bonds and debt. And I was like, I don't care about this at all basically at first. I was like, it just seems like so outdated. And I know in the past, it was recommended that people invest in bonds much heavier than they do today. Today it's, most of the profiles are 60-40 on the conservative side, 70-30, is typical. But afterwards, the second time I read it, the bond section I actually thought was one of the most interesting sections in the book because to really understand how bonds work and to use that in terms of just kind of a gauge of risk is super important. And I know Johnny always picks on me because, FINRA's stupid website sucks. But if they do have bonds, it really is super useful just to see kind of how they're trading, see what the yield is, and it kind of gives you general sentiment because and RK used to touch on this too. If the bondholders are still in it, that means that they at least think they're going to get their money back, And if they don't think they're going to get their money back, you know you ain't not going to get anything as an equity investor. So it's just something good to keep track of. So the debt here, there's a term loan. Sorry, I was going on a tangent there. When's this term loan due? 25? So 2 years it looks like we got till the rest of that will have to kind of be paid off. And this is what they have right now, 153. Did it go down? When's this data from? 9:30? What do you have for debt?
Let me check. No, give me a second then, because I have not pulled them up yet.
I do have long debt here as the 154, so this must be adding in the other stuff, this 199. So it's really 154. You know, we're sitting here looking at this too. It's already been bought too, so I guess it's all for naught at this point, right?
Yeah, it's about learning though.
No, I know. That's why I wanted to pull it up.
The signs are there, but I think this. There's a reason, obviously, that we both have looked at it and made comments on it. I have added it to the tracker. Like it has stuff that we like about it.
I will say, man.
I just pulled up the owners, and there's some funds that owns this like high in their portfolio. You know.
Yeah.
Like I saw one of them had his like second position and fourth position. So, which is big names also, Oaktree.
Oh yeah, okay. Oaktree owns them. Okay, that. Yeah, I do follow those guys. Yeah, but I don't know if it would have caught my eye. I mean, look at this. I mean, you know, I don't really care about earnings so much, but 73 cents. I don't know what they were expecting, but that's not great. And then this a revenue is a minus 45% year to year. I mean, that's a pretty ugly looking. I can see why people were so bearish.
At that time, the market cap was getting close to like where it's not so attractive anymore because it's too small. But I guess that's also why they've been bought up, right? They got cheap.
Yeah, I mean, obviously someone saw something there.
Yeah. I'm pulling them up now. For the total debt, I have 208. For the current liabilities, I have 141, and for the short term, I have 54.
Gotcha. Yeah, this probably needs to be updated because this is from 9:30. I don't know why Share Radar doesn't have the data. Yeah, they only have it from 6:30. So
mine is from the same date. So yeah, they are. A bit different.
No, that's the other one I had up. No, yeah, so 9:30. So either way, I mean, it doesn't matter now. So.
But at the same time, it's good to see that things we track and follow ends up successful in a way, you know?
Yeah, no, definitely. I remember when I looked at them, I thought it was interesting, but I remember thinking it was too expensive. And did they have preferred before? Was preferred in this? Yeah. So, or no, mine's right here. This would tell me. The only thing is sometimes I got to check this data because my non-common equity, this is where it typically would show me preferred, if they have preferred or are paying a dividend. But that's the thing too, is if they don't pay the dividends, this can come up as zero because I believe this is just how much they paid out. And also sometimes it depends on what management's incentives are because some of the bonuses and stuff can fall in here too. So if this column, let me just make sure that's the right column. Yeah. If this column is highlighted, it doesn't always mean there's preferred, but it does it's a way to catch my eye.
Yeah.
But either way, you know, I did have it rated at 520, so it did get, you know, when these guys bought it and I said it's worth about 522 a share, you know, they paid a pretty good premium if this jumped up to 959.
I see if the data is correct in Whale Wisdom. Oaktree, it doesn't say average there, but Luminous Management. Have you heard about them?
Luminous?
Management. It's
Um.
a LLC.
Oh, I don't know if I have, to be honest.
Because they have if the data is correct, they have the average price at 468, so they also have a double now.
Gotcha.
And I think Oak Tree has around the same entry there.
Fury Resources. Yeah, so it looks like the one you were talking about, those were the guys who held the preferred shares that were convertible.
Okay.
And it looks like they're going to do something to hand them off, essentially.
Yeah.
All right. Either way, back to the grind here.
Yeah.
So, have you ever looked at Photronics?
Sorry?
Have you ever looked at this company, Photronics?
What's the ticker?
PLAB.
No, I don't think so. Let me check.
Because I had pulled these guys up before, and it's a well-run company from what I could see. I liked it a lot, and I guarantee you the only thing I actually labeled this as a great company. So this is one that would probably go in one of my other portfolios. And normally this isn't really one of the companies I would pull up for this style of investing, but with these great companies, I mean, look at this chart.
Yeah.
I mean, this is there's some really awesome entries that you can find on these things, and I know when I saw it. Let me see when I last looked at it. On 4/13. So what was it doing on 4/13? Oh man, it was worth. It was cheap too. What did I say it was worth? 21. And I said to buy around 12. Oh gosh, maybe I was just it just didn't quite get cheap enough where I wanted it. But you know, this is probably something I can work on too, because when I have a great company, I'm gonna have to, because like I said, this had a lot of things I liked about it. I've actually ranked it as a 5 in confidence, which is extremely rare for me. I probably shouldn't have discounted this one so much, because when it's a good company like this, it's probably going to keep growing. And I mean, just look at these metrics. I mean, look at this. Book value is $20. Your margin of safety is at $20, and this is growing, so it's pretty locked in. And just all metrics. I mean, things just look good. It's growing. CapEx is a little high. They don't really do much with acquisitions here. It's considered safe on every metric. I mean, these margins look fantastic. And then look at this. This is debt versus cash position. I'm even saying that this is literally in a net working per share is $6 in just cash. So, oh gosh, I don't know. This is a real missed opportunity for one of my other portfolios, to be honest. This person's Michelle. Is Michelle a guy's name? Can that be a guy's name? I guess it could be. Or is it?
Could be in some countries.
Oh yeah. He's got his name's foreign too, so it's probably more normal there.
I have them up now. It looks really great. I see the same things you have gone through, and it just looks like a well-run company, in my opinion.
Yeah. So just because I probably should have just ran through this for everybody else. So they manufacture integrated circuits, flat panel displays. It's a key part of they're used as masters to transfer circuit patterns onto semiconductor wafers and FPD substrates during the fabrication of ICs, a variety of FPDs, to a lesser extent, other type of electrical optical components. So involved in semiconducting manufacturing, and they were just saying in the other one, they have manufacturing facilities 3 are located in Taiwan, so it's probably what TSC uses. 1 in Korea, 3 in the States, 2 in Europe, and 2 in China. So I know there was some risk, obviously, with being in some of these foreign countries. But, I mean, the thing is with a company like this technology obviously is required, because, you don't get these kind of metrics unless, like, you're a needed company. And this goes to show me, too, that I doubt there's a lot of competition currently in the market. We're talking a 1.8 billion market cap. So, but I mean, these guys are just sitting on cash right now. I mean, 400 million in cash. I mean, it's insane, and they got facilities all over the place. So, this is definitely a missed opportunity for me. But they don't pay a dividend, but share counts really stayed pretty steady too. I mean, they bounced up a little bit, but this is something nice you see. I mean, as this company's like, this is like what a company's supposed to do. It's growing slowly its share count, and it's growing its book value. And then once its book value starts to really take off and the company starts to really produce, you notice they start buying shares back, throughout here. And I can't imagine that these guys aren't going to pay out something, with this cash. Something's going to come back to shareholders here, whether it's a dividend or buybacks or something. Or they're going to keep growing the company, which if the company is able to continue growing at these levels, by all means. I mean, you're starting to see net incomes almost 15%. I don't know. It looks good to me, right?
They were up 16% on Wednesday on earnings beat.
Yeah, I figured they probably just had and that's the thing too. I'm sure when you look at this chart, if I can find it, pulls back up here. You probably can see where earnings are, and that's when it people trade earnings so much. They take it so. But this is why if you follow the company beforehand on these earning turns, and you understand the business a little bit, you see the cash flow, and at some point that's going to turn into earnings. Just because a company doesn't have earnings during a quarter or something like that doesn't really mean much. But if this is when it's going to take off, these are the ones that you want to be in. And like I said, I'm going to kick myself here because normally I give a lesser discount to a company that I consider this great. So this is how you learn as an investor. I can tell you right now, when I was doing this, if this was back in April, my way I value these things, if it's considered a great company, if it lands in this list, I give a much more minor discount because it's not going to drop that much. It would be super rare it's going to drop that much with that solid of fundamentals, unless like there's a real story changer. And I know there's always, like I said, the foreign risk from investing in China or something like that. But really, like I said, my point of just bringing this up is, just to kind of punish myself and remind myself that I'm an idiot, should have bought this. But it's one of the ones that I know I looked at. Even on this, and like I said, this is always a conservative metric, and it doesn't really take into account future growth. So that's one thing that, if you guys are looking and using any of these values, don't take them super seriously because it doesn't really take into other things. There's other things that need to be taken into these fundamental valuations, and this is just it's a stupid formula I made up, and it has some meaning to me. But it's in no way, can you even really value something properly? Is that even a possible thing to do? I don't know. I doubt it, and no one cares, But this is looking good. Anybody who's in this, congrats. And congrats to management and everything. I think you guys are doing all the right stuff.
I saw there was a lot of articles on City Alpha, but not so many comments. So maybe it's you think a lot of people are involved here?
It's kind of hard to say, but
the market cap is big, so not big, but bigger than a lot of the other stuff we go through. So. I was a bit surprised, especially when I saw the fundamentals, that not more people are talking about it. There was only one comment on the earnings transcript.
Yeah, and I mean, 1.8 billion is not even that big to me. I mean, that's honestly not a bad place to get involved. And this is one I'll continue to kind of dabble in. If this pulls back, this is one that I might put into my other portfolio where I tend to take on great businesses. I'm just looking. I'm going to look for a pullback. If they have a bad earnings season, and I'm able to follow the news and see that it's not going to, like, it's a one-off event, or whatever it is. That's something that will definitely interest me. So I'll definitely look for a pullback. Now, am I going to get 50% returns from here? I don't know about that. So it's tough to throw it into this portfolio, specifically for the laughing stock. But you never know. Sometimes these things go on sale, and that's when you scoop them up, and you can have a long-term CAGR for a while. And this is the kind of company where I'll probably hold it for over a year or two, and see really if it can keep going. And as long as it's running close to my 50%, I could put it in this portfolio. But I'm happily, if it's I don't know what its CAGR's been, but that chart's been going up for. If we look at like a 5-year chart here, I mean, bullish. There's.
I was going to ask you about the chart though, because you see since May 2022, it has some spikes up and then quickly down again twice before we have this big spike up now, and you see it tend to land at the 14 to 15 mark after the big spike up.
Yeah, and ironically, when I just did my calculation here, 1466 is what came up as my buy price.
Yeah. How do you think you would have? Let's say you buy in at 1450, and then you own it all the way up to 26, 27. How would you play it then? Because that was in a short time, like the last spike there. Obviously, now that we know it, if you hold it, you would have even more gain now. But I think you would trim at least there, right?
Possibly. It just depends because, like I said, when it's a great company, I treat it a little bit differently because it's something that you could hold for the long term. And the reason why I say that is, for instance, Johnny, if let's say I was looking back in 19 or 20, and there's one of these drops here around like the $8 mark, and if we go back to the fundamentals here, so what was I just saying, around 20? So if we go around 20 here, I got 14 for book value. I got cash flows positive. So it would probably land similar around like a $9 to $10 would be like an entrance for me on this. So on a pullback there, I would be interested in it. But as this keeps creeping up and it keeps getting, each year it's progressively getting better. Book value keeps growing on these kind of things, and they're not taking on debt. They're not increasing share counts, which just means the business itself is just growing. It's just doing better. All these metrics are starting to improve, where normally I would possibly think about, like, if it's a play where I think it's just something shorter termed and I'm going to start to trim out of it a little earlier, I might hold this and I might keep trying to either buy on pullbacks, because you don't want to sell out of a great company if it's just going to keep going up. If things are going to continually just keep marginally improving, what you're going to do is you're going to kick yourself, because if you bought in, let's say at the $9 or $10 mark, and you've still been holding this whole time, now you're up. It's a 2-bagger. Or a 3-bagger, right? It'd be a 3-bagger essentially. And, it doesn't look like it's slowing down. So even in these drops, I'm not as quick to jump out of a company like this. And that's why I said I try and treat the two portfolios very differently, because I feel like when you're looking at great businesses versus like more the cigar butt investing that we kind of do on the bottom side, or deep value, you really should treat them differently. And I know you meet a lot of investors, and people say that, pick a style that works for you. Me as a person, I'm okay with having multiple styles all at once. I just have to make sure that you stay very focused on, when you're investing in something, knowing why you're investing in it and where that should go in portfolios. And that's because people are like, how do you time getting out of something? I don't think it's necessarily it's your time getting out of it. You have to understand what you think it's going to do. You know, if I think it has kind of a top that it's going to reach and it's just cheap, like let's say it's a cyclical and $30 is where it always hits at the top and 15 is where it always hits at the bottom. On something like that, as it gets close to 30, yeah, I'm going to sell out of it pretty quick. You know what I mean? It's getting back to where I think in the peak of cycle it can get to. But a company like this that's just growing, the sky's the limit. So yes, I probably would be trimming on the way up very slowly, but this is when I'm going to really drag my feet on, and there's times I'm going to hold this like you know, we were talking before about Coke. Coke's another one that in my opinion is a great company, and I haven't even thought about selling it, and it's gone up. It's gone, you know, I've been up, you know, I think I'm up 90% or 100% right now, but at one time I was up 70% and then it was back down to 30% and then it went back up. So it's like you can't, with these kind of ones, you just have to stick it through. You gotta just stay confident in the thesis that it's a good company and it's going to continue to grow. Management's doing the right thing, and I feel like as long as you're checking it kind of quarterly, making sure nothing really changes, it's more just kind of that old you know, put the money in the jar underneath the bed and just let it go. You know. Yeah. But that's the value investor in me. You know, I can't. You know, I think Burry calls them rare birds, you know, that, and Burry, even if you look at some of the stuff that he's wrote, you know, he says that in general, he's doing more of the cigar butt type investing. It's a little bit quicker. He's not holding something really for the long term, but he said every once in a while, you do come across a great company, more like Buffett style, and it's worth holding something like that for a long time. You know, I mean, look at people that held Amazon or Apple or some of those ones that are growing over a long time. You know, if they sold or trimmed out early on, yeah, you're happy to lock in the gains, but then you want to kick yourself later on when you're like, there was no reason to get out of this. You know what I mean? Like, it just kept improving. Like, and I know Amazon's tricky at first because it wasn't generating cash. So, but at a certain point, you start to see those margins keep shrinking. They keep growing. You know it's going to become positive at a point, you know? And that's, I think, what makes a great investor. You know, how are you able to take all this information, take all the news, and really see if you can predict that company a little bit into the future. So it's really all you need to do is just a little bit into the future. And from that, you should be able to make sound investment decisions. Yeah. That's a really long rambling way of saying that I think it's a great company.
Yeah, but it is though, and I think it makes a lot of sense. We have also talked about this before, also on the stream actually, that we have different portfolios, but also we have talked about in the future if we succeed in a hypothetical scenario that the style will change a little bit, and this would be more along those lines than companies like this, I think.
Johnny, I believe you meant to say when we succeed.
I try to be careful.
You gotta at least you gotta have confidence. So you know, if it's gonna work out, it's gonna work out. You just have to have that mentality.
For sure.
And this is why too, you know, I'll read through what these other guys write and stuff, but it is really important to form your own decision. And after you start to look at hundreds of companies, you'll know when one stands out, because most companies, especially in the small cap world, they're not this kind of clear-cut picture of a business doing well. There's not a ton of them. Even if you look at my database here, if we scroll all the way up, guys, real quick here, you'll see I got a few on my watch list. That's what this blue spot is here. On deck, I have over 200 companies, so it doesn't take as much to get onto that. A wish list, obviously, it's tough. You know, this is 1 out of 100 then really hops on a wish list for me. And then good companies, I have about 25 on here, or great companies, whatever, it doesn't matter. But either way, we're talking out of 1,000 companies, you know, it's very rare I come upon one of these. And I don't give something this label easily. You know, it really has to impress me in a lot of different factors. And so I saw it jump up, and I knew immediately that that was a missed opportunity for me.
Yeah. I must say that I like the start of this stream. We punish ourselves, right?
Yeah, I mean, but you know, it's not money lost. That's the way I look at it. Like, you know, yeah, it's a missed opportunity, but you you know, the time where you're gonna see me get frustrated is when I've done something and I'm not happy with my choice. Which the good news is that's becoming rarer and rarer. You know, like I said, I really take my time and methodically try and go through and make sure I find something that's worth your while. This one pulls up well too. Who is this? All right, so this is Canterbury Park Holding Corporation. You got this one pulled up, CPHC?
I think I did them on Thursday, Dave.
Oh, did you? All right, good. I'll go quickly.
Go through them and we can check them.
All right, so horse racing, casino, real estate development. Okay, so they're a mix of different things. They're involved in the casino. Okay, I think I remember quickly seeing that you were talking about. It was tough because I had my my 1-year-old like climbing around as I was trying to watch your stream. So my dog's jumping at the TV.
I don't remember everything I said, but I think the conclusion was that I don't usually know how to get into like the gambling stuff, so it was a bit tricky for me to read the numbers and everything like that. But it looks good on some stuff, and I was a bit confused on other things, you know.
Gotcha. I mean, just at a quick overview look here, same thing. Looks like it's been it's doing historically well for itself. If this is cyclical, that's something I'll have to figure out. But I mean, it's paying a pretty standard dividend, and they actually cut the dividend when they're supposed to. You know, like in here, it looks like they struggled a little bit, and instead of being stupid and trying to continue to pay the dividend and taking on debt or something like that, they didn't do that. And look at, you can see book value here kind of pauses for a second. But it also means that, you know, most companies are like, oh, don't cut the dividend. You know, we don't want to lose those shareholders. Instead, these guys are like, just cut the dividend, take the hit on the stock price for a year or two when it bounces back. And now look at, they've kept debt at a minimum. You know what I mean? And this whole outlook on this company stays positive because they don't have that debt. So you keep seeing, you know, they, like I said, have some rough years, but now all of a sudden book value is still increasing. It's at $16 a share is what I get. I mean, whatever that matters. But cash flow looks great. You're not paying interest now on the debt. You know, you don't have to dilute shareholders in any way to cover. And, you know, there's nothing worse than seeing someone paying a dividend as they're either diluting shareholders or they're taking on debt. Cut the dividend. I mean, you know, it's rarely going to benefit a company. I think that's always like a Band-Aid by management. You know, maybe there's some instances where I'm wrong on that, but in general, I would think that's how it should be played. And I think what we had discussed, Johnny, real quick, or what I remember is I get about $20 for this one, fair value, and it's at $19.50. So I think pretty quickly, even though this one looks decent, it's just too expensive. But oh, whoa, look at that drop. Oh, actually, I want to go smaller. What was this drop on?
Oh no, hold on. Let me think. I think this is the one who dropped and then he gained it back in the day after. Am I correct about that?
Yeah, no, it looks like that. But that's what I'm saying. What was the what's the news on why such a big drop?
I remember now. Couldn't find any news.
So it just sold off that much?
Yeah, and I think this was part of why I brought it up because of that. But you see the news is from November. You have something now yesterday though with the dividend there.
Yeah.
And the articles are very old, so I remember now I didn't find any news, so it was a bit hard.
What is this? Is from 2020?
Yeah. And it gained almost the whole fall back the next day, I think.
Yeah, it's strange. That's a really strange move. I wonder why. Maybe someone. I mean, obviously someone sold. This was just one big sell. It looks like. But
yeah, the volume is higher than normal. But since I couldn't figure it out, it turned me off a bit on this company. But I had a question, like in the gambling industry, you see they have some cash. Is that normal for these types of company that they have some cash on the books regularly, or?
You're saying just cash here?
Yeah.
Yeah, I mean, no matter what is a casino type environment, I imagine you have to have just basic liquidity. I don't know how much you need to have. I don't know how much of this is actually in the business operation or because it's a holding company. Are they just collecting this cash and they're going to use that for, because they don't, well, I guess they don't really do much acquiring. So I don't know. But I mean, they are paying dividends back and they keep that cash on hand. It's probably just for liquidity purposes, but obviously whatever they're doing is working.
Yeah.
Actually, real quick, I just want to go to, because, you know, this is one of the few times too, it's really helpful to go in here and just see what management's saying about like their future outlook, you know what I mean?
Yeah.
Is that zoomed in enough, Johnny, or should I zoom in on that?
It's fine for me. Maybe you can zoom in another one.
Yeah, I'll just go in a little bit.
Yeah.
All right, here. So at a glance, so it's in Las Vegas. If people didn't realize that, good place to be as a casino.
Yeah.
Got that pristine balance sheet.
Horse racing too.
What'd you say?
They have horse racing venues too.
Yeah, it looks like they kind of do all of it. And me, from where I am, I'm in what you would consider central New York. We're not that far from Saratoga, you know, and the track here it's a big thing. It draws in a lot.
Yeah.
You ever been to horse racing?
No, I haven't. But I lived a little bit in Australia, and it's very big there too. So
Gotcha.
I know that it draws in a big crowd.
Yeah, I mean, increased net income decreased slightly. So, you know, one thing I didn't really look at here is just how they're doing up top here. So it looks like, you know, SG&A at times is pretty expensive. You know, it looks like it eats up a lot of the extra cash, which that might be just nature of the business. I'd have to look at other casinos, you know, or other companies more in this realm and see if that's pretty normal. I imagine it is. But either way, I mean, net income's a little bit down, but it's also down from a really up year. You know what I mean?
Yeah.
So that doesn't necessarily, you know, where if we're talking, it's 4.3 million. That might be maybe more normalized. And I would imagine a company like this would be somewhat cyclical, because if they're not doing a ton of acquisitions and stuff, I mean, I don't know how much do you think you can grow this? You know what I mean? I mean, the only thing you can do as a company, if you have one casino and you're kind of locked in just that one casino, the only thing you could do to really increase your revenues is, I mean, you can cut things, or you can try and make things that produce better margins. But I think it's going to be minimal. So I feel like when I look at a company like this, I would think that it's going to be relatively cyclical. And you're going to have really good earnings period where people are out, you know, gambling and spending a lot. And then you're going to have kind of some down years. And then, you know, it's just going to go with the times, you know?
Yeah.
They always say...
Did you see the insider ownership is 38%, and the two co-founders own like a third of the company together. I remember I pulled it up on my stream on Thursday.
It's the co-founders that own it?
Yeah, they one own like 23%, I think, and the other one owns 10.
I just like when it's the original founders that own it.
Yeah, that's the... I had to Google them.
I don't know why it's not pulling this up. Sometimes the shortcuts for well wisdom get all wonky.
Yeah.
Randall Sampson.
That guy. Yeah, that guy and the Dale, number 4.
Oh, Dale. Here, I got you. Get out of here. All right. I mean, this is interesting. But you know, I do like this one.
Yeah. I had too many question marks about things that I didn't do, so I think I skipped them on the stream. But I commented a bit on the cash generation that it's up. But what do you think about in terms of compared to the share price, which is almost 20?
Well, you know, no matter what, I think this looks like it's a pretty well-run casino. And like I said, I definitely want to at some point check on other casinos and just see kind of what is a normal the SG&A costs. I'd want to look at management and just make sure that they're not giving like crazy benefits to themselves. And you know, I don't know, maybe that's how they pay out to the other workers there. But stock prices stayed pretty steady, right? If I remember.
Yeah, and if you look at the earnings per share historically, since 2005, they have 1 year where they are in minus. The rest is plus, at least in my data set.
Yeah, same. I mean, and it's.
So, I think like management is reasonable here.
Yeah, no, everything looks good to me. Where's oh, here's okay. Yeah, and now it looks like for whatever reason, you know, I just want to be careful because it looks like things really improved, and I'd like to see going forward how that works out. This is the one that no one's talking about on Seeking Alpha.
Yeah, and that was my biggest thing. Like, what happened to that big drop and the bounce back as well? Because, yeah.
Oh, and he's saying, okay, so Canterbury Park owns and operates a racetrack and card room outside of Minneapolis. So what was the Las Vegas thing they were saying? Is that just where the company's out of?
Let me check what I have.
What is I mean,
they are headquartered in MN. Is that
that's
Minneapolis?
Yeah. Well, it's Minnesota's the state, but yeah, Minneapolis is the city. Yeah. Sorry, I'm just closing some of this out. Well, let me.
But I bet they have many venues. They even have bars, restaurant, bars, other food menus. So maybe some of them are in Las Vegas.
Yeah. Players compete against each other and not against the house. Oh, so their card games are unbanked, which is probably like poker and stuff like that, because it's saying that it's not like you're playing against the house. It's not like blackjack. It's like poker where you're playing other people.
Yeah.
Pursuing a strategy to enhance shareholder value by ongoing development of a total of approximately 140 acres of underutilized land surrounding the racetrack in a project known as Canterbury Commons. So I would like to know what is Canterbury Commons and how do they plan on taking advantage of that, you know?
Yeah.
And this is another thing to pay attention to. You know, it says it's regulated by the Minnesota Racing Commission under the card casino legislation. Canterbury Park is authorized to host up to 80 tables. So you also have to wonder too, legislation-wise, a company like this might only be able to expand in certain ways. So it's not like they can just go build a new casino and, you know, they have to go through all this process of making sure it gets approved. You know, it's not so easy to just expand.
I'm just, don't you find it very weird? Because the drop was like 38%, if I remember correctly. That there's nothing on this.
Yeah, I mean, unless it's old Randall here dropping 144,000 shares.
That's what I was just checking, like the normal SEC page, and the last thing that is filed is 15th of November.
I mean, if you think about it from his perspective, if he values it close to anything like we do, maybe he saw around $20 and is like, yeah, this is a good chance to just cash in on some. Or, I mean, there's a million reasons why obviously you could sell. But it looks like other people buy it right up as it gets sold, So
Because it bounced back the next day.
yeah, honestly, I think this is something I'm going to throw on deck and just kind of keep an eye on because it looks like it's well run. I do think it's cyclical.
Yeah.
But I'm going to say good fundamentals, ownership. Put it on deck. No debt. And I'm going to say good narrative. And the narrative I'm thinking is really just they do have an opportunity to take advantage of the land that they own. It's a net. And they pay a dividend. I mean, this is, for me, like I see all this stuff, and I'm going to say I have a confidence already of around a 4 on this. And I know this is quick, guys, so you're going to be like, how do you have that much confidence about it? But really, it's more like I said, this is in comparison to a ton of other companies I've seen. So, and the other thing, though, it's important to put in here, and this is always like a warning to myself because I'll see this in my other one, is just put too expensive and just let myself know that even though I was confident and I like this play, it's just too expensive for me right now. But this is why you want to throw this on deck and you want to keep track of this one. Because if it does drop for a reason and you can go back in here and you see that the fundamentals hasn't changed. I mean, if something's generating, this is $2.44 in free cash flow a share, and these numbers are basically increasing. So if it holds anything like this, even if you look at like a 3-year average, which is more realistic than ever looking at a 1 year, or even like the 7-year, even if you did a multiple of 10 for this, I mean, you're getting $20, right there.
We have some exactly on that. I have a little bit of different numbers to you, Dane.
Why? What is yours saying?
Mine is 73 cents on the free cash flow.
For the recent quarter?
Yeah.
Or 12 trailing months?
Yeah.
What do you have for CapEx?
Mine is 8 million.
When's your data from? 9:30 or more recent?
Yeah.
All right.
Just something to note.
No, I'll go right to the SEC. We'll nip this in the butt. Make sure it's, because that's the other thing too. And this is why too. Another big thing, guys, is before you ever make any kind of decision, if you ever use like a share radar, which, like I said, in general is great, but sometimes when things look great, it's worth just taking a peek at the balance sheet and stuff just to make sure that you're not getting bamboozled,
That's a bit of a difference.
So operating lease payable to horse persons.
You should add on that.
I need to become one of those horse persons. That's a big business. Some of those horses in the States, they sell for so much, and then they like the stud horse, because it's able to breed. Yeah. Oh my gosh, it's insane.
Yeah.
So you said you had 8 million in CapEx?
CapEx, yeah.
Is that, am I missing something? Is this going to be under cash flow to explain where CapEx is?
I'm just gonna check the exact number here.
Sorry guys, usually I just kind of go off my numbers for CapEx, so I'm just trying to see if I see, because the only thing I see, is this in This is just in U.S. dollars. I mean, the only thing I see that's around 8 million is the deferred income tax.
Yeah.
So I wonder if that number's coming into you for some reason.
Could be.
But it could just be the way it's pulling the data, so it's not to say that you're not correct. Does Yahoo ever say anything about CapEx? I don't really use this, so I don't really know what it tells you.
I don't see it, no.
Nah.
Maybe Market Watch can put it up here.
Either way, I mean, I'll have to figure out exactly where that is. I don't want to sit here and just waste time on it. But it's like I said, the only issue I really see with it right now is it's a little too expensive for me. I think it's fairly valued, but just a little pricey for me right now. So
yeah.
I would just like to see this on a pullback, which I definitely think we could get. How's the chart on this look one more time? Oof, it's tough to find these pullbacks on this. I mean, this is like the COVID drop, but then right back up, and yeah, it's come down because everything got so overpriced at the end of 22. But I mean, look at this. Even at the end of 22, most of the stuff, when it came back down, most stuff really started trailing down, into this range, and this one came down and then popped right back up, and now it's down again. And yeah, there was a big sell, which I'd like to know, man, you want to figure out what that sell is, because if that's one of, like, for instance, if that's one of the owners and they sold it and dropped the stock price $5,
yeah.
Where's volume here? I mean, what's their average volume? Oh, it's really small, really small. Okay.
Yeah.
So that's why, I mean, yeah, with a company like this without much liquidity, I mean, this is something that can move a lot. But interesting nonetheless, though, Just going off a more recent drop, I would say that around like 15, I'll be interested in something like this. Just because it looks. Oh, and I did put cyclical in here. I was gonna say, because I want to just remind myself it is cyclical. And then, so for instance, guys, so I looked at Canterbury here, and let's see where that popped up in my spreadsheet here. Oh, you know what? It probably popped up on the losers because this is from Wednesday. Oh, this is why you got to be on top of things. Look at this. Popped up on my losers, and imagine if I had looked at this right before it jumped back.
I was very quick though.
Yeah, but and this is why sometimes you really got to try and stay on top, because if I would have looked at this and it would have been down to $14, this might have tried to get me. I might have started to think to take a position pretty quickly in this, and like. I don't know how quickly it bounced back the next day, but if I started to see it come back real quick, I might hop in on this one, because I think it's a pretty good company. And like I said, the only time I could probably really get hurt on this is if it was cyclical, and we're at a high, maybe, which could be true, but
What did you have for capex? I think I found a number on Market Watch that says 5 million, but that's from 2022.
For the recent chunk, I have 0. I had -3 the year before, but let me actually go to my data. So this is 285. So I have $475,000 in capex.
Yeah, according to Market Watch, 2021 was close to 4 million and 2022 was 5. So something is off somewhere here, but just something to pay attention to.
Yeah, I mean, the more important thing too is you can see what that does to your free cash flow margins, because regardless, free cash flow will take into account the the capex, you know.
Yeah.
So as long as free cash flow remains somewhere where I think it is, but you said that I'm just trying to think why your numbers would be so different than mine. Because what did you say you got for free cash flow? Like 80 cents?
73.
Like, you know, that's what I have closer on like a long-term one, but not recently. But I'll have to figure out why there's such a discrepancy there.
But either way, too expensive right now. The market cap is below 100 at this point. How confident would you be if it drops closer to 50 in this company?
I think in this case I wouldn't care. I don't think I would care that the market cap's low on something like this. When I see this kind of cash generation and it doesn't have debt, my worries of it being in that range. Now, if let's say it was at 50 million and dropped to 25, then that's getting a little tight and it's really small. But I mean, like I said, it's all in context, which is why when I'm seeing all this, and just in general, I mean, they've been generating earnings, they've been generating cash flow this whole time. You know, it's not been as great as it is right now, but it's been generating it its whole time. It does interest me, and if book value is going to just continue to grow here, which I mean, this is impressive book value. I mean, you know, we're seeing a lot of green in here. This is all good stuff. That just means, you know, historically it's well run, retained. Look at retained earnings.
Yeah.
I mean, compared to assets, I mean this has a lot going for it essentially. And I do agree with you. I got some zeros in my numbers here in terms of intangibles, and well, net common overflow is not going to matter because they don't have any debt. But obviously, I'd have to look at the numbers and just verify. But no, I like this one. This one to me is interesting, and I wish I would have saw it on the drop.
The share count is steady also for, you know, that they don't have any debt. It's good to see that it has been steady for all these years.
Yeah, and honestly, I sometimes I like these companies with the low share counts. It becomes very interesting to me.
Yeah.
But all right, you got anything to add there? You want to move on to the next one here?
Oh, I think we have gone through it, and I don't remember exactly what I said on Thursday on this company, but I think the conclusion was that there was too many unknowns for me, so I just skipped past it.
Yeah, you know, and in terms
also,
of
in the back of my mind, like I haven't dealt in the casino business too much, so but it's interesting to listen to you go through them, and I still think we looked at many of the same things. But I was a bit surprised that there was nothing on that drop.
yeah, I mean, like I said though, but you have to think if someone's selling out like that, you know, if someone's selling out of shares like that, and the average share was what 4,000 shares a day.
Yeah,
I mean that's so low that, like, you know, if you have a big sell here or a big buy, you know, this is 3,000 shares. You can send the stock price from $18.99 to $19.50. You know, I mean, but it's insane.
Like you said though, if this is the owner or someone who owns a lot, it's a bit worrying.
Yeah, but the big thing here, someone sold like 2,000 shares, and someone must have sold another 7,000. So we're only talking about 10,000 shares got sold here. And then someone quickly bought right away. So someone's watching this, because you see 10,000 shares go down and 10,000 shares come right back. You know, there's people who are interested in owning this very quickly around that price. You know what I mean? But it's tough. A company like this, you got to be, I mean, you can see what liquidity does to this. I mean, it doesn't take much to really move this stock price.
No, not at all.
You know, and I know they announced the cash dividend, 7 cents. It's whatever. It's like nothing for a $20 stock price. but you know, that's not you know, I don't really care. It's not why I'm looking at it. But you know, revenue. Well, 2020 is COVID, so that year that it's being down doesn't really mean much to me. But in general, I mean, look at even just look at revenues. Oh no, this is Lovesac. Back to this one real quick. You know, still slowly increasing. I mean, and they have kind of some down years where it's nothing crazy. But my big thing here is that if they're just not taking on debt and they're still slowly just growing, you know, what else do you want to see as an equity investor? You know.
That's a good point. Yeah.
And I get what you're saying too in terms of like you know, not having confidence in some of these things, but I think that's part of being in small cap is you won't always have that confidence that you kind of wish you had, but you know, and I, like I said, I'm sure there's going to be times it bites me when I go concentrated into a position, but at the same time, you know, you saw right there, it's a $5 move, and it only lasts for a day because something for some reason changes volume quickly. And honestly, I don't even know if I could have got in because if I don't know how many shares I bought, but it would jump the price. I know it would jump the price if I took a heavy position in this. You know, if it only takes a couple, you know, probably 100 shares to start really moving the price, it's going to move quick. That's why I was saying I'm really careful with my stop losses and stuff like that. So if I do hop into something like that, and I agree, the more I think about it and I see that lack of liquidity there, that is a tough company to play. No matter what, you know, there's not going to be a lot of opportunities to get into that. But still, I think it's a good one to have in the tracker. You know, I'll keep an eye on it at some point, see if anything happens with it.
Let's say it was and again, like you said, someone obviously is paying attention and snapping all those shares up on a discount, probably for what they think. And let's say that was bought from the owners then, and the owners didn't sell. That changes everything a little bit.
Yeah, I agree.
So it's just the lack of information that, and also the articles were very old on Seeking Alpha, so. Yeah, it was a bit tough.
Yeah. All right. So, have you ever looked at Lovesac? It's a furniture company.
I have looked at them before.
So if you guys have ever seen it, they have modular couches, bean bags that they call sacks. Very clever. Home decor, all that kind of stuff. A lot of seating type stuff. Sac Products is filled with a Durafoam, a blend of shredded foam. I don't know if they have any kind of patents or anything on that, or if it's just typically what the kind of industry uses. Looks like last time I looked at it, I rated them very harshly. So we'll see too, because if let's see, what's the actual ticker? Just Love. If I looked at this from a while ago, maybe it just needs a good updating. Because like I said, yeah, this was earlier in the year, so this is going to need a real update here for pricing and everything. Book value is at 12. Looks like they're finally getting some good cash flow now this year, so I do want to look into that. They must not have any debt, and no, they do, but I guess it's just basically covered with the book value. I'd like to see what that is and see if it's operating leases or if it's actually long-term debt. Obviously, what initially got me to look at this is definitely this insider. So let's take a peek at this.
Yeah, that's what I'm checking currently. I gotta be quiet there. I'm checking up the Satori Capital now because they seem to have sold them both a lot in the past here. They have a big buy now recently.
Yeah, $3 million, almost $4 million worth.
Almost 4, yeah. Private equity firm.
No dividend. And it looks like really this last 12 trailing months is obviously the best they've done. I do try and I be careful, trying to be careful at times because for instance, when you're looking at like simple free cash flow here, if you're looking at a yearly basis, I mean, you got 35 cents, then you got minus 275, now you got plus 250. That could be due to accounting. It could be that, you know, 1 year it looks really good, but it's because last year, you know, they took a bunch of stuff and gave it to this year. So this can obviously be distorted. It's really why it's important to look at longer term trends. Historically, the company's not that old, but if you're looking at this is probably about a 5 or 6 year average. Cash flow is more around 58 cents, minus 30, but it is growing is the thing. I mean, things are improving basically, so that part looks good. Book value is increasing. Share counts have really held steady, and his debt is kind of growing, not super fast, but it's not decreasing. So before I keep calling it debt, let's just see what it is real quick.
By the way, Dane, I think I should mention, because I'm the one who mentioned this often here on the stream, but this is close to a 30% short interest.
Well, that's interesting, actually.
Something to keep in mind while you look at the fundamentals here, because that's high.
Yeah, that's really high. Yeah, it's all operating lease. They do have a line of credit, it looks like, available to them, but it doesn't look like they're actually using it currently. So it's all just leases. So it's a pretty clean balance sheet. 37 in cash. And how's that cash position doing? Is that growing or? Sort of. It's kind of stagnant. It's not really growing, I would say, by any means. You know, revenues have really taken off. Are these guys acquiring? No, they're not. They're not acquiring either. No. So this is all organic growth from the business. So next quick question, that this is where I would usually head. It's let's check seeking, see if anyone's talking about it.
I did it just now as well.
We're doing the same thing here.
Yeah. And by the way, just people who have not watched the stream before, and you know, on the last company our numbers were a bit off, but on this one they are more accurate, and we have talked about that in the past because we use different data providers, and normally they are very similar, just to mention that, so for new people that watches, to clear up a few things.
Yeah, and to be honest, I mean, if it's slightly off, I'm not so concerned. It's more just the general idea of what's going on. Yeah. Sell-off provides a good entry on November 29th. Yeah, I mean, you're up 50% from there. And in October, this got down to $14. Short interest is 26%. That does seem very high, doesn't it?
That was even on Market Watch, that's where I pull it in from. It says 28.53.
And I mean, on a 1 year, this is up 47%. So I don't know when these guys shorted, unless they shorted back here and these are just old shorts, you know?
I couldn't find them on the website highshortinterest.com. I don't know what that means, but
sometimes that's kind of wonky when you look at that. I know I have it actually as a shortcut here too, because I do look at this.
Yeah.
But yeah, it's kind of weird. Some of the things that show up here in the other ones, I don't know if it's just needs to be updated or whatnot. But yeah, it's very strange sometimes when I look at this list comparative to other things on how accurate this is. Who knows? Maybe this is the more accurate one.
If you put them into that list, it's like a top 5, right? Something like that.
Hang on, let me just bounce back real quick.
Top 10.
Well, it's in 26, so I don't know how many. I don't know how many lines. It's about 20 lines, so it's in the top 20 companies according to this. But the problem is this also doesn't include the company we're talking about, so who knows how accurate this list is.
Yeah.
But yeah, it is weird. Why isn't Love on this list if it's truly that high a short interest?
Let me check a different source. Hold on.
I was gonna check Yahoo real quick just to see what they say.
Do they list? Oh, yeah, they listed, of course. Wall Street Journal has the same.
Yeah, this says 25% from November 30th, and percent of float's 27. So there's a good amount of shorts.
They were beating, or they had a 10% jump 6th of December on their earnings report. And I just to see at the chart also now, it's on the way up a little bit. So with that high of a short interest, would you be a bit scared?
Or very bullish.
If you were short.
You got to go against the grain, man. Screw what the other people say. You know?
Yeah, but I mean, if you were short this company.
Oh, if I was, yeah, would I be short this company? At $27, maybe actually. I mean, you know, this is the thing, and this is why I'm looking at these numbers the way I'm looking at them. You know, this rate's at $10.46, but it's a young company, so you always have to take all these metrics like kind of like for what they are, because, but book value is growing. They don't have a ton of like any kind of goodwill or intangibles. So I mean, book value is pretty much the same whether you're talking tangible to intangible. And the debt in terms of per share in terms of net common overhang isn't that crazy, and it's all leases. Like I said, they don't actually have any debt, so it's a clean balance sheet. And then on top of that,
not issuing shares.
What'd you say?
And my calculator is not issuing shares on this one.
My only issued 1 million, and that's only because it's not impressed with the cash flow like it needs to be. But for instance, let's say the next few quarters cash flow continues to be high. This number will jump very quickly. I mean, these numbers, this won't be levered. This won't say it's levered, you know. So it's only because we haven't really had this really positive cash flow until only recently. I mean, even you know, net cash flow is even positive right now, but it was really down here.
I misspoke a bit because I saw the same number 16, but it turns out red, so I guess it's issuing a little bit of shares, but not so much more than 1 million, you know.
Yeah. And honestly, whether it's issuing a million, I mean, look at this. Look at what my calculator does. When I go from a million to not, I mean, it changes by pennies. It doesn't matter. Like I said, half the time when I'm using this leverage calculator is it's really helpful when it needs like a small amount of leverage. If it's really levered or it's barely levered, it's kind of like I don't really use it. I don't really care.
Yeah.
You know, market's more bullish on it. You know, it got up to $30. It's at 27. We got good insider. I'm definitely gonna change around what I said about this because I don't even know why I said high debt before. Too expensive, yes. Needs more. Too young is my more bigger issue now. But it doesn't have bad fundamentals by any means. Did we say there was ownership on this one?
4%, so I don't think we have checked it.
I am going to comment just and say like you did, high short interest, 26%, just as a reminder. And I did rate this a lot higher last time I looked. You know, like I said, I give it the $10 now. That's a pretty harsh. I think I would use tangible for this. And the reason why this is getting dragged down is because it's saying, you know, equities here, but cash flow is limited. So it's not convinced that the equity will continue to grow, but it has been steadily growing this entire time. So I really need to see what these guys are saying in terms of going forward. I mean, is this oh, they own Swarovski? It's like a
I think it's just a partnership.
oh, okay.
Because I saw they had another partnership with Xbox ahead of the Black Friday or Black Week thing.
For chairs? To get people to sit in their chairs?
Yeah, probably. I didn't read it, but that was what I was thinking.
Is this crystals embedded in your stuff?
I don't know.
Fancy. Look at this.
That would be fancy.
It's a Swarovski crystal embellished foot sack. I know what I'm gonna get you for Christmas, Johnny.
Yeah, thank you. I'm looking forward to this one.
Yes, you're gonna be warm and luxurious, and it's right in my price range for you.
Yeah.
Interesting. Not really what I'm. This is. I mean, this is just all the basic stuff here. 13 weeks ended. So I don't know. I mean, everything's up. It doesn't look like it's down by any means. It still is a net loss though for income here, which I'm surprised.
Do you think they have? Well, I guess a lot of companies have, but when is Black Week? By the way, I don't remember now.
What do you mean, Black Friday?
Yeah, it's like end of November or.
Yeah, Black Friday always follows our Thanksgiving holiday.
All right.
So Thanksgiving's always on a Thursday in the States, and the Friday is always Black Friday.
All right.
And Black Friday traditionally is kind of like the kickoff of the holiday shopping season.
Yeah, that was with the Xbox partnership with the chairs, and then they have a 10% jump on their earnings report.
Mm-hmm.
I was thinking if that was a very successful thing, but I maybe that was a bit late with the Xbox thing in terms of Black Week.
It's just called Black Friday. But
Friday. Here we have Black Week.
You guys do it for the whole week? I mean, we have Cyber Monday, and I guess it's the same difference.
Yeah. No, we also have Black Friday, but we have Black Week as well.
So is that the week of Black Friday or after? Or?
Yeah, after.
After, okay. Yeah, I mean most of the sales kind of continue on, but like traditionally, at least in the States, like all the big box items like TVs and computers and probably couches, they only have a limited amount that they're going to give like a huge discount. So like it's kind of a rush for a lot of people to get out there and get those real big discounts.
Yeah.
You ever seen that movie Ghost from like 1980 something?
No.
Well, there's like these little demons that like pull people into the ground when you die, and you keep getting this like little fog coming off your shirt there. Kind of looks like one of the shadows. It looks like it's gonna pull you down, man.
I was thinking, where are you going with this story?
just ignore that.
But those chairs looks comfy though, I must say.
They better be.
Yeah.
Actually, I mean, is this an actual couch by these guys? Because that's a nice looking couch.
Yeah.
Place the buy rating. Yeah, I mean these modular lines of couches, I will say I think that's the future. Have you ever seen any of these things? And like every piece comes apart and like they're really easy to clean and all that kind of stuff. It's definitely super convenient.
Yeah. Pay attention to, since this article it's up 40%.
No, I'm not doubting Jeffrey here. Jeffrey made a good call.
Yeah.
It's interesting they sell out of Best Buy. It's not what I would have pictured. I mean, Costco, yes, I picture them selling out of Costco, but Best Buy? That's strange to me.
Okay.
Usually, I don't know if you know what Best Buy is, but it's usually more like electronics.
Yeah. But they have their own stores too, right? Or is it just like in the malls?
Best Buy?
No, I mean.
Or Lovesac? They must, because they have all the operating leases, so they must have their own stores and everything like that.
Yeah.
There was a picture of like a little looking store. I don't know if that was just a picture or on something I saw.
Yeah. Okay.
It's projected to grow revenues 9.7% in year 24 to 719, and another 8.75% in forward year 25.
Oh look, RH. Remember RH?
Let me bounce back to that. Yeah, I mean, I actually kind of agree on him with this, because, you know, typically this kind of thing I wouldn't think, you know, home buying and everything's kind of slowed down. So for this company to continue doing well, you got to give management kind of a good pat on the back there.
Yeah.
I mean, he places a $38 on the stock there. And like I said, this is why when I'm looking at this $10.24 that mine comes up with, guys, like you got to be really careful when you look at that, because it's really deceiving based on these numbers, and you kind of learn once you use these spreadsheets a lot when you have really limited data. And I know this is 5 or 6 years, but you got to take it for a grain of salt. It's really hard to say that it's not worth more than this. And then the other thing too that we were talking about earlier, we looked at the insider. I mean, these guys bought $4 million at 25, so obviously they think that's a good price.
Yeah.
I mean, it's obviously been much more expensive.
I'm checking Whale Wisdom. This.
Wow, look at this
Did you
chart.
check them? I didn't.
Talk about cyclical here.
Because they have a lot of sales too.
You're talking for the insider?
Yeah, I don't remember the name now. My computer is loading a bit here.
Yeah, but most
Satori Capital.
Most of the sales that I'm seeing are at much higher prices. And this Andrew Hayer guy, he keeps buying right around the $20 mark.
Yeah,
timing it somewhat pretty well.
Yeah, no, you're right. This looks good. If you just look at the insiders here.
I mean, it definitely, when you look at it at 15, it's arguable that and this is another thing, you know, me and Johnny always joke about technical analysis, but in this case, I'm not necessarily afraid to go off a chart more on this kind of thing, just because, like I said, my valuation numbers here, they're, in my opinion, a little blown out of proportion. They're not super accurate. And I mean, the cheapest this has gotten to is 14.18. So I mean, if I wanted to be really conservative, I would say 12, just because that's book value, and I picture book value to keep growing, especially if they're predicting growth. I'm trying to see where I would think that these guys could continue, like, would lose money.
In terms of the chart, though, it's getting close to that. If it takes out 30, like you said, based on the chart alone,
it taps 30 every time. You know, I mean,
but if it keeps going up,
somewhere in here, there's definitely some resistance there.
the
the next level would be like, what do you think, 40 after that?
Yeah.
And then 50?
I would like to read the bearish article, because I wonder, were the bears in all the short interest from people just thinking the retail environment's going to be weak and they're gonna struggle through this, and then to everyone's surprise they actually performed very well, and that's why you see this drop and then this quick pick back up, you know.
Could be, but short interest tells me it's from 30 of November. If you look at the chart, then it's already bouncing up.
Yeah.
Quite a bit from 1450 to like 21, you know.
Right.
In a short time.
You know, I mean, if you were gonna try and trade this, I would say RSI was a pretty good indication here of your entrances and exits.
Yeah.
There is some pretty strong volume here too as it starts to come out. I mean, if you look when it sells out too, because you know this is what the technical analysts say is, you know, when you see this bottom here. And you see this really weak volume on that bottom.
Yeah.
Although this is in November, so I guess there's a little more volume, but then as it starts to break through here, I guess that's where you see the reversal. But man, I can't believe this got down to $14. It does seem cheap. You know.
Yeah, it does. I'm checking social media like Twitter now, but yeah, there are some people talking about it, but not a lot.
Yeah, just stronger than anticipated earnings. Yeah, this guy said price for value, but with growth, which is, yeah, that's the thing that interests me. October 17th, he said that. Yeah, where it's dropping. Interesting. Where did I just go? Here we are. All right.
There's one on stock tweets saying it's a short squeeze candidate number 1. Maybe that's what we see a little bit of the start of.
Well, I would argue too that, like I said, I wonder, because sometimes I feel like the bear thesis is pretty weak. It's just like retail is going to do bad, you know? Yeah. So people are like just shorted. You know, if you look at most of the furniture manufacturers, I bet most of them probably are struggling. And then you see a company like this that's performing well through this, and the problem is it got kind of thrown in with all the other ones.
Yeah.
Cost of capital.
There's a little bit of talk that they are a bit surprised that more people have not noticed. So.
Oh, you know what? No, I was just reading on Seeking Alpha. It says apparently for Q2 of in reporting its Q2 for year 2024 results on time as NASDAQ has issued a warning for the company. So it looks like they had difficulties in reporting. So I know sometimes shorts start to hop on because it's always I get it. Sometimes maybe management just doesn't get out the information as quick, or they're waiting on something. If you've ever dealt with accounting, you know what that can be like. But sometimes I feel like you see that, and you see NASDAQ offer a warning saying like, hey, you guys got to get your filings out, and people just think that just means that they're, you know, something's worse looking. You know, like they're trying to hide it, almost.
Yeah. So maybe that's why it has gone up then.
This guy uses Aswath for the to find his beta. So
Evaluation. Yeah.
he's a real value investor.
Yeah.
Yeah, guys, if you also want to learn a lot about valuation and how to, what kind of things you should take into account when you're valuing a company, Demorduran, his stuff on YouTube and everything is fantastic.
Yeah,
He literally puts his entire courses on there. You can take like, you know, upper level college courses on this stuff. And I'll say he's definitely had an impact on the way I understand and am able to evaluate things.
Well, there's some interesting things going on here, for sure.
Yeah,
It could be worth tracking.
Yeah, no, I'm definitely going to keep an eye on this from my last valuation, which I'm not a fan of how I had looked at it last time. I think it looks pretty good.
Yeah.
I'm gonna keep that it needs more. I guess I'll throw it on deck just to keep an eye on it.
Yep.
And I will say I think it's a little too expensive, but I'm gonna just some pricing. I'll probably keep an eye on, see if I'll probably use this line of support here. I don't need. I'm not trying to draw 30 lines here. Somewhere around 20. 20 is probably a pretty good support line, and we'll see what it does from there. I think that's when I would start to get interested, is around there.
That's some nice artwork.
Thank you. Thank you.
Nice.
Yeah, and I'll be interested because one thing I like to watch to see how well my value calculation works is as this company gets a few more years under its belt, and this should become more accurate. It'll probably keep bumping it up. You'll keep seeing the price improving here. I've thought about trying to build something that takes growth into consideration. As a percentage, you know, over years, and I could also, you know, maybe throw in some values based on what management comes up with. But I don't like to take growth into too much consideration because I also don't want to. I don't think it matters. Like, does it really matter if I can calculate a growth value at some point? If you're able to understand from this point that I think it's cheap even at these levels, and if it continues to grow, obviously I'm not buying around 30. I think 30 is obviously showing some real resistance. But $20 to me starts to interest me. It just keeps bouncing off that area, and to say that it's not fairly worth $20, I don't know. You know, they've had earnings around $2 over a 3-year average. It's almost $2 a share I get for earnings. So to say, you know, 10 times the share price of that, I don't think it's crazy. You know, and like I said, even if we add these up and I get, you know, because like I said, I think a lot of this is going to be kind of cyclical in terms of what's going on here. You know, where it bounced down to like $15, $14, I can't picture it being any cheaper than that. So, I mean, if you were going to get really conservative and you're going to try and time this at the bottom, if it ever dropped back down to like $15, it's probably almost an immediate buy. Unless, like I said, like the next few earning reports are just terrible. But, as of now, I don't see that happening. I think these guys that were looking at it on Seeking Alpha have called it relatively well. But yeah, once again, I'll just put this in, and like I said, these are just guideline numbers. Obviously, these are very conservative, but that's why it's important to know that when I'm looking at this, I don't think it's fairly valued at 20. 20 is like, hey, look at this. 15 is like more buy this because, and that's just this instance. But that's what I'm saying, and I'll say this a million times, guys, too. Don't buy this at 15 because. Once again, I'm going to have to delve into this when it gets down to $15. If it drops back down to $15 again after this bounce, there's probably a good reason why. So it means to look at it again, really, is what all these numbers are saying for me.
I mean, a small piece of information can change everything, right?
Right.
And that might come when we are not streaming. So
and it can go from 15 to 5. So...
so always we say it a lot, but of course you need to do your own research here, and this is more to just show how we are doing it.
Yeah, and like I said, my understanding of investments, it's always changing as time goes on. I'm becoming a better investor. I think everybody who invests, you can see it. If I go even 5 months back from where I am now, I'm a much better investor. If I go 2 years back, it's insane how much better of an investor I am now. But that's just the part of growth,
For sure. I added it to my tracker just to pay attention to the development of the share price and to figure out a little bit more about the short thesis and all that stuff that we talked about.
Gotcha.
Yeah.
And then and now, so just real quick, pulling up Creative Media and Community Trust Corporation, which is a real estate investment trust. So this is a real REIT. So I think I threw this in here just because it looked pretty cheap. And I know I don't normally look at REITs, but every once in a while I'll pull them in. A real good indicator of how a REIT's doing is the dividend. Now, obviously, some of these numbers are all over the place because the share count has moved all over, and REITs are required to pay out 90% of the earnings or net income essentially in a form of dividend, because it's really, if you guys, I'm assuming people know what REITs are, but if you're really new to investing, it's basically like a way of almost owning real estate, and instead of having to deal with owning real estate, you just buy into REITs. And then they pay out into dividends, which is like the mortgage payments that you would get from like your renters. Typically, they don't bounce around too much, so I can probably pull up a chart here real quick and see if this interests me or not. We have to figure out why this is struggling so much. And a lot of times I can skip a lot of the metric work because it doesn't really mean so much for REITs. It's not, you can't look at this like you do, like for instance, the Lovesac. It's just two totally different kind of companies. So, Daniel Jones, I've definitely looked at his stuff. Oh, this is from 21 though.
How do you look at insider buys in REITs? Because there's been a lot since May this year in this company.
Well, it would tell me, number one, these guys value their company too high because it's gone down from $5. But no, when you're buying into a REIT, like I said, these are hard assets that the company already owns. REITs are tough to expand on because you have to pay out your net income in 90% in dividends, like I said. So it's not like you can take the cash that was generated from being a REIT and kind of reinvest that into the business, because the other 10% is kind of going to just the operations of the business, where the 90% gets paid out as in dividends. So the only way a REIT can really add cash from it's got to be from outside sources. So it's got to be some other person comes in and says like, oh, I'd like to maybe buy like this property or this building, and then they can add it into the REIT with outside cash. But you can't take the cash from the business and necessarily do that. At least that's how I understand it. So I might be wrong on that, but I'm pretty sure that's why it's tough. It's tough for them to really grow a lot because you don't always have that extra money like you do. Just looking at this too, you can see a decrease in revenues. You can see an increase. No, don't do that. You can see an increase in share count. You can see margins are down. I mean, not terribly, but they are down. Now some of them are down quite a bit. You know, net income's way down. Book value just keeps decreasing. Let's see what's going on with. They have 470 million in debt. Although it says 0 in your short-term debt, so I imagine this debt is the debt that like almost like the mortgage on the building. You know what I mean? Like it's like a set thing. Like they don't own the building per se. And a lot of these are done through leases. So they don't really own a lot of the properties. They basically lease them, they generate the money from them, and they get paid back. And obviously what you pay and what the property generates, that difference is what you hope to make on a REIT. So a lot of this is like contractual, like in terms of like contracts. So let me... I know this one's a little old, but I'm just going to take a peek and see how he explains it. And this is the thing, I don't picture this having some kind of big pop.
No. That's a bit hard to see, I agree.
You know, and it's complicated because they're always buying and selling assets. It is also issued special dividends totaling $52 a share. So, you know, that's another thing to take into consideration is that's a lot of money handed back to shareholders with a price that's, well, I mean, get rid of this. Even if you look at a 5-year chart, I mean, a 10-year chart, if you've held this and you got some of those cash dividends paid out, I mean, it definitely was a good investment somewhere in there. I mean, this is from 2021, so it was somewhere in here. But, you know, this share price has really collapsed.
Yeah.
Is there any comments on here? Agreed. Thank you. Very helpful. So shines improvement. There's nothing to change the structural issues that it has. In addition to the severe shrinkage the company has undergone, it also has a capitalization problem. Oh, there's preferred? Oh, man, that really kills it for me.
Yeah.
If you got preferred on top of it, you know, as a dividend investment, I mean, you buy REITs because you want the dividend. That's literally why you buy them. So if there's preferred on top of it, I think I'm already done here.
Yeah.
So
this is I've
CMCT.
said it before on the stream, but I find it a bit hard to get into these types of companies, the REITs, but it's something I need to improve on.
Yeah, I did comment there's preferred. I said good fundamentals last time. This is over a year ago. I'm going to take that out. I'll comment that there was insider. I'm going to say a poor narrative. It doesn't look like it's coming back. And it's really shrunk. It's just going to definitely need more no matter what. I don't think it's going to go bankrupt, so I've changed my when I'm labeling these. If you see a 1 now it usually means that it's going to go bankrupt, and I don't think this is going to go bankrupt, but I don't think it's in really any kind of great position. A lot of times too, when I'm valuing something like a REIT, I'm going to look at the dividend, and you know, dividends been decreasing here. This was in 1 year they paid $43 out. You imagine if you held it that year, if that's correct.
Yeah. That was 2019. I have the same.
Yeah, that's crazy. But yeah, like he was saying in the article, you know, revenues have really dropped, and if you're not making a lot of money off that, where are you know, assets are down. They're a little bit back up right now, but it doesn't look like they're generating much from it, and book value continues to decrease. So I think what I would use in terms of my valuation on this is the dividend itself, which is the 26. So in me, if you were going to hold this for a long time, I'm going to assume book value keeps going down here because they haven't been able to do much with it. So I'm going to give it a pretty tough evaluation of 260, and that would be on the idea that if you held this for a long time, that's how much you get paid out in dividends. And I'm not holding something for that kind of period, you know. So I'm going to need this to be really cheap, for even from where it's at now, to get interested in this.
I know you talked about the share count, but why is it so up and down? Like, is that typical for REITs?
I'm not sure. I don't know if they had good times in here. I also don't know. There could have been warrants. There could have been preferred convertibles. There could have been reasons why the share count is bouncing around. I don't know. Maybe management had a lot of extra money, so they, you know, and they decided to buy back shares here. I mean, we could go and figure that out, but it doesn't really matter. I don't think right now to figure it out. It even matters to me. But I mean, don't get me wrong, not like the ugliest thing, but you know, you're starting to get negative net income, and if you're getting negative net income, that dividend's going to keep going down, which is why I'm giving it a pretty harsh valuation, because you can't keep paying that dividend without them taking on more debt, and you know, it just looks like it's slowly spiraling in the wrong direction. I mean, you can see my calculator says to bump up the share count to 117 million. So it's saying to dilute pretty heavily, which is why, you know, you'll see it says it would be 726, but that's if it generated a ridiculous amount of cash. If you're going to dilute, you know, 500%, the share price for this would just tank. You know what I mean? So you'd almost have to dilute more than that. And that's the problem. That's why using this calculator, it's something to use, but you can't just go off of it. You really have to understand what the nuance of all that is.
Let's go to the next.
Yeah, the next one, just loading up real quick. The old Canada Mine Gold Exploration Company.
Canadian.
Canada.
Nice.
Trying to think why what caught my eye on this one from the dashboard, because I remember seeing it, but I don't remember why what I liked about it right off the bat. I remember there's something about it. Here we are.
In my data set, I only have like 2 good years to go off of, so this will be a bit hard for my sheet.
Yeah, it probably is for mine. I think just, you know, it's generating cash. One thing that scares me a little bit here is these revenues compared to market cap. It's pretty low.
Oh yeah, that was very low.
You know, it looks like it's slowly generating here. We got to figure out where this is, and you know, are they building mines? You know, like, because that's the thing with mines. Are they expanding? Are they not expanding? My calculator right now, especially being with this low book value and not much generated per share, I can tell you real quick, it's too expensive. But there is some narrative, and with mines, you have to kind of look at that. You have to see, are they expanding, and if they are expanding, what do they think it's going to generate? And mines are, I think, one of the hardest things to predict, because you know, they do all these surveys and they try and estimate what they're going to be able to get out of the ground, and this is exploration, so these guys are just trying to find spots to mine, you know what I mean, on top of it. I don't think it's going to be it's not as easy to be really confident no matter what. There's so many things that can go wrong.
It seems like they have some issues. I just pulled up some articles, and they are referring to a problem in Panama.
Yeah, I see they have a lot of land in Panama.
And on the articles, it's all from the same author. So this Taylor Dart guy, who obviously follow them closely.
EPS of 2 cents. Yeah, I mean they are positive, so I mean that part's not a bad thing.
Recently ordered to stop mining at an asset that accounts for roughly 5% of Panama's GDP and employs 40,000 people. But there's some halt in production, it looks like.
That's what I'm saying. Whether it's a halt for environmental reasons, there's governments that can tell you to stop. There's so many things that can go into it. So it's a little complicated. And you know, I in this kind of situation too, I will kind of lean more heavily on someone like this as analysis, because it's going to be really hard for me to know anything close to enough about mining to be confident in this. And you know, I mean, this brings up the point too that another style of deep value investing obviously is to really spread your bets across a ton of different options. And what that probably does is allows you to really look at a company like this, and if the story and everything sounds good and it looks somewhat cheap to you, but you really don't know much about it, you know, to put 0.5% into it of your portfolio, or 1/4%, is it going to hurt you if you're not right? Probably not. You know, I mean, especially if you're already taking into account margin of safety and possibly doing a stop loss or something like that. And if it does well, I mean, this might be a 10-bagger, which even if you only put 1/4% in, if you put 1/4% in a bunch of these companies and they all do really well, you know, you can obviously hedge your bets that way and still get 50% returns off tons of smaller companies. And I think
final comments there
on this one, is that what you're saying?
Yeah, on his summary.
Yeah, I was reporting more social observation results.
Seems to like the thesis has been pushed out to a little bit later, so
that's what I'm saying.
Question mark.
You know, there's, you know, it's always uncertainty. It's always slower in permitting, and every time I look at one of these mining type things, that's like, I feel like that's what most of them are dealing with. Like every time is there's always just issues getting things running. You know, when they start to mine it, it's not as quality as they had hoped for. So like the amount that they're able to get from each actual, you know, excavation, it's not as great as they were hoping. You know, I find no matter what, mining's like a lotto ticket. You know, you're trying to find as much minerals in a safe and, you know, hopefully environmentally safe way. And I just don't think it's as easy to predict any of this stuff, which is why I tend to back off some of these. And like you said too, this doesn't have a ton of data. So
no, that was my next thing to say. Like especially when you read that article and there's a lot of question mark, you don't really have a lot to base your thesis on 2 years.
Right. And I mean, they do have good cash. I mean, you know, that part's good. And it looks like they have pretty solid assets. You know, they're calling these assets tangibles, not intangibles. So that all.
Can you pull up the insiders? Do you have their source for the Canadian companies?
I don't. Because you got to pay for that one website, right? What is it, Canadian Insider?
Yeah, you have to pay for it.
If this is on TSX, maybe we can find it. Can you just search a company? Yeah, here we go. ORLA. Analysts rated a buy. Honestly, I haven't used this website much, so I don't know.
You know, stock tweets have some alerts, some accounts that post of insider purchases. So I'm gonna check that now.
It does tell you ownership, but does it tell you? Sun Valley Gold LLC. It's a big percentage of their portfolio, but ownership and company is what I want. Nothing super impressive. This Sun Valley Gold LLC, I don't know who they are, and I don't know if they're great at more of the mining side of things. Maybe they're better at knowing that, but
Yeah. No, I'm gonna skip this for now, I think, personally.
yeah, I mean, I'm just gonna add it to the database because it's not totally unjustified. It's a minor. Kind of need more foreign risk, especially with Panama and all that. It didn't really have high debt.
They were in Mexico as well.
Yeah, I saw they had a few different spots. Foreign risk in general to me just kind of means I think I'm only going to give them a 2 just because like I said, I didn't have too much going on. I wouldn't say I had a poor narrative and you know, I'm just going to say, you know, recent total trailing 12 was positive. Just as a reminder. And I'll probably stick with the actual price that this gives me right now. So pretty conservative. It's definitely too expensive for me to be interested in right now.
Yeah.
But yeah, so that one, guys, you know, not quite as much to delve into, which isn't a bad thing. Just sometimes you can look pretty quick and just see it doesn't necessarily interest you. A lot of times that happens, to be honest.
Yeah.
Which is why I think it's important in your screening process to be
More efficient.
yeah, just cognizant of making sure that you're finding stuff that have decent metrics or seem cheap, because if you're just looking at random stuff, like most of it you're going to pass on really quick. So it really helps to kind of narrow it down so you're not, you know. Here's another miner. Now see this one though. This one looks a little more interesting to me. It's got a lot more going on. It has cash. It has very low debt. Still has the foreign risk, but you can see book values increasing. You know, numbers look good. We're a little bit further along in the cycle of these mines, which is another important thing to start to know when you're looking at mines. You know, how long are these mines going to run for? How long are they supposed to generate this cash? Is it going to continue on for, 5-10 years, or is it only got like a year or two left on its biggest mines? Because those are all things that are important. But I mean, according to this, which it was this, where is this out of? I know it's in China, but is it actually a Chinese company? Because you got to be really careful when you're checking these things to make sure that it all adds up. Just because they don't have to be audited. No, okay, so it is Canadian.
All right.
But primarily takes place all in China. Small dividend. Not bad numbers, not great numbers. It got down to $2.08. Honestly, I don't think that's not a bad price from what I see real quick here.
Sorry, I just had to pull them off, but I have the numbers now.
I'm just gonna try and delve a little bit more into some of these things. So I'm gonna close all this stuff up, guys. On my last stream, I wasn't super quick about closing all the tabs, and it didn't really seem to mess with the stream quality. So I hope that stays true. You know, I try and rewatch some of the streams, or at least skim through them, just to make sure there's not like major slowdowns or anything like that. So I'll try and fix that going forward too if we do see something. But
and let us know if something is annoying. We want to know so we can improve.
just think about it, guys. Going into the future, it's gonna be great. You get to wake up every Saturday morning and be treated with this, you know, this kind of entertaining, educational investment advice.
Yeah. It's great. It must be great, right?
Yeah.
By the way, Dane.
Not that it's really investment advice. It's more.
I'm looking at the stream and it says we have a new person watching. So welcome. Thank you for taking the time to watch us.
All right. Yeah. If
Feel
someone's
free
in
to
here,
comment.
it's probably my wife. No, I don't know. But yeah, if you're in here, thanks for stopping in. Currently looking at some mining companies happen to pop up, so we're just kind of going through these. This one's from November 28th, so this is pretty recent. Shows a decline in silver production, but an increase in gold. So that's another nice thing too. I feel like if you're looking at a mining company, if they're well-rounded, because if certain minerals aren't doing well, or metals, you know, they can hopefully one offsets the other one, you know, as a lot of this stuff is cyclical.
I know we talked about it not so long ago, but and you have said with the foreign risk and all that, but how much does it bother you that these companies just operating in China?
I mean, there's definitely some risk, no matter what, you know, as tensions and stuff change in the world, you obviously have to calculate that. I mean, you can tell, you know, over the past probably year and a half, you know, the relationship as it deteriorates between some of the different countries in the world, it puts a real price effect on some of the investments coming out of these countries. And the tough part is too, is people are, number one, you're hesitant because you have to know that the process isn't perfect for getting information out of some of these countries. So it's not audited. You're not necessarily sure what it is per se. But on top of all that, if anything's to ever change, like, people are scared to get into these investments. You know, why am I going to risk going into a company where if I have company A, Y, Z, and Y and Z are in a country that I'm really confident in, I trust the numbers, and then A is in this other one and I'm not really sure, and on a level playing field they all look pretty similar, they're going to hesitate to go with A just because there's an inherent risk of being in a foreign country and all that brings. So you know, you have to kind of take that into account no matter what, from country to country. You know, like for instance, like Argentina has been struggling historically. And I don't know if you guys follow the news much, but they have a new president, or however, whatever their president's name is, Javier, who's quite the colorful character. And he's coming in and basically going to take a really different approach on government. Whether he's successful or not is obviously to be seen. Economically, it seems very bullish for the country because Argentina has really struggled historically. And, you know, there's been some really big, like, bond market rallies in Argentina recently and things like that. So it's not to say that you can't also benefit from it too. It's just that now you also have to understand what's going on in some of these countries on top of what's going on with the companies. It can get very complicated, and that's a lot of extra risk that you're taking on. That, you know, this company could be doing great, and let's say a civil war breaks out in a country, the whole investment falls apart because of something that had nothing to do with the business, and you just weren't looking at that, which is something that, you know, normally you don't have to take into consideration in most countries that are considered more of a stable environment. Not to say that they're going to have they don't, you know, I'm not saying Argentina's at any risk of civil war, but just as an example.
Yeah.
So same thing with China. I mean, you know, it's hard to say what the government's doing and what the information that comes out, it's always hard to trust any of it. And I'm not saying that, specifically to China, but I'm saying to any country that it's not being audited in the same way as whatever your companies that you're used to looking at are.
Yeah, and that's where I immediately, because this didn't look so bad on the fundamentals, but how much can we trust it?
Yeah, I just want to, real quick, I'm just looking at some of the metals that they're talking about, just to kind of get a comparison. One of the things I'll do sometimes with a metal company like this, and who knows how accurate this is at all, but if I can get a few similar charts and kind of compare to see the kind of effect it has on the actual company itself, that can kind of give you an idea of how things are going. And if one of those metals look like they affect the company more, just from the chart view, because for instance, this is zinc, this is the actual company, this is gold. If you compare these side by side, looks like it trails a little bit in terms of how zinc runs, and gold's just been slowly going up. So I doubt gold has too much. I mean, it's called Silver Corp. Let's bring up silver. That would make a lot of sense. We'll do a 5-year on here. So it's kind of struggled, as silver's kind of stayed consistent here. So if anything, it looks to me like it tracks zinc very closely. So just something to think about. When you see production down for zinc, that might really hurt this company. You know what I mean?
Yeah.
So another thing to think about too is maybe put a note down saying that zinc seems to have an effect on the company, and it really zinc prices are down heavily, which can correlate into a drop in revenues for the company. So if zinc starts to recover in the future and this business kind of stays steady with their different mines and stuff they have, you might see that as a pretty bullish signal for their future operations. It's not bad fundamentals.
No, they are not.
I mean, this is kind of goes without saying. It's a commodity. It's obviously going to be cyclical. Watch zinc and silver. And there was some ownership, nothing necessarily super impressive to me. I mean, according to this, no debt. It is a net.
Yep.
They've diluted shareholders, but nothing crazy, not in the grand scheme of things.
No, and very slowly and carefully, it seems like a little bit.
Yeah.
In 20.
Although sometimes that real slow trickle of stock, you don't think about it in the long run, but it is diluting shareholders.
Adds up, yeah.
Yeah, it adds up. So, just trying to think. So I'm gonna say no debt. Obviously I'll have to look more into that. This is a minor. Just trying to think. It does seem relatively cheap. I'm gonna give it a 3 just because I don't mind its fundamentals. It looks okay, and it doesn't have debt, which is always a big plus for me. It doesn't look like they over or under spend on either buying or selling assets, so that bodes well. This retained earnings here looks pretty positive. you know, dividends obviously nothing impressive, but it's not terrible. I mean, it's you know, like they have it there, whatever 3 cents means on a.
It says like I'm going through the press releases, and one of them is it's a semi-annual dividend, or just a little bit per share.
Yeah, so it's I mean it's almost non-existent, to be honest, in terms of what you're thinking there. My tracker says 374 on this, so obviously that's not bad, which means I get about 250 for an entrance price, so we're not too far off from there. And actually, what was the low on this though? The low was the 208 here.
208, yeah.
So I think I'm going to use that actually as more of my bottom here. So I'm actually going to say around, I think it was 229 is about 10% or 15% above that. I just want to look at the chart one more time. I know I got it already up here, but just on a shorter time period.
Also in the press releases, it seems like there's some disagreement on some acquisition they have recently made. Seems like there's another company that is bothering them a bit with the acquisition.
Which article are you looking at?
No, in the press releases.
From the business's website?
Yeah.
I don't need to be an investor relationship manager. I'm just trying to need a job.
Yeah. I'm trying to look at the other company that they are discussing with, what they have said, because
You know,
it's not so easy to find.
yeah, and I mean, obviously everyone's going to say this, but high margin, long mine life. So, I mean, I like that because it at least as an investor, it's a little easier to predict than, you know, people going with more of a short-term asset. Made new discoveries. Yeah, it does seem somewhat cheap to me. One thing I want to look at is what kind of volume are we talking for something like this? Oh, it's moving quite a bit. Almost 1 million shares daily, 1.5 million. So it's got pretty steady volume.
It seems like one company took quickly, they bought a bigger share in a company that Silvercorp is acquiring. And they did it just ahead of a board meeting, so there's something going on there that is
Gotcha.
yeah.
Yeah, I do find this this one's relatively interesting. I'll probably, when I get a chance, go through like their filing here. Looks like did they report semi-annually or no? Doesn't look like it. Do they report quarterly? Yeah, they do. So where am I trying to go here? No, it looks like they're only reporting once, so maybe in their reports, when you look at it, it does break it down into quarters, because the share radar data somehow breaks it down quarterly, which is strange. But yeah, I mean, this is one that you actually will. I'll probably at some point read some of the 40F here, just to get a better idea of what's going on and what management's actually going to say here. I won't bore anybody with that right now, but I will keep an eye on that. All right, well, I got one more that I had pulled in initially. I know you had thrown some tickers here, but it is we're approaching almost 10 o'clock my time, so
we can stop after the last one.
Yeah, we'll take a peek at this last one, see if it's got anything about it.
Yeah.
But yeah, this is why I'm saying too, like, you know, I feel like we found some decent companies here and there, and these are things that I would possibly be interested in investing in, it, you know, all things considered. So it's really important that I get that on deck sheet set up how I want it, where it can really catch my eye, and I can really quickly, because I want to check that as often as possible. You know what I mean?
Yeah.
All right, so ticker's Calm. It stands for Cal-Maine Foods engaged in production, grading, packaging, marketing, and distribution of fresh shell eggs. So they're dealing with hatching chicks, growing, maintaining flocks, layers, and breeders, the whole process of getting eggs. So all the way from the chicken to the egg.
I think, Dane, should we just establish right now, like, what came first? Was it the egg or the chicken?
I don't know. I wonder if Cal-Maine knows about it. Eggland's Best and Land O'Lake branded eggs are produced and processed unrelatedly. I mean, so like in America, like these are big names. I know these names. So I didn't realize Cal-Maine's the actual company of it. But it looks like it's got cash.
Yeah.
No debt. Where are we? How are we finding these companies with no debt all of a sudden lately? Like, I feel like it's so normal. Normally, it's like everything's so levered, and I'm always like, oh god, this is so ugly. But I've been finding some stuff like these are actually, it looks like pretty well run.
I have looked at Calm in the past. Let me just see if I have them in the tracker.
Is this a special dividend? This $5? That seems really high.
Yeah, I actually have these in the tracker.
And I know egg prices have kind of been all over. I know in the States, that's like one of the big inflation things can be just eggs. Oh, here you go. You want to talk about something that causes things to drop and whatnot. Cal-Maine Foods says one of its facilities tests positive for avian influenza. So maybe it'll cause a sell-off. Look how happy this lady is with her chickens. I'm sure that's exactly what it looks like.
Sorry? I didn't pay attention now.
Oh, I'm just saying, this picture of this lady picking the eggs one by one. I'm sure that's how it works. I'm sure it's her going around picking these eggs.
it's hard labor that's that business.
684,000 laying hens, and she's got it.
Yeah.
Wow, look at that. So that's only 1.6% of its total flock that they're saying may have the influenza issue. So they have a lot of birds. That's a lot of birds.
Yeah.
So it looks like it's only one facility. It looks like they stopped that facility immediately, and it says there's been no positive tests for HPAI, which must be the highly pathogenic avian influenza, at any other calm locations to date. So it does sound like in general that this is definitely a one-off type thing, like, in terms of this kind of like land stock type, just having farm animals, that they probably are actually somewhat clean and paying attention and making sure that their facilities are, safe and you always hear like the horror stories of some of these places and how they take care of the animals and whatnot like that. And don't get me wrong, I'm not saying this is like a a resort, but this guy said the egg exceptional dividend. See what he did there?
He gets egg prices. Do you know a lot about egg prices?
Yeah, they're volatile. That's what I know. I know they're up and down.
I would like to see a chart on the egg price.
Here you go. You want to know about the eggs?
I like the graph. That's what I noted in the comments, that I saw improved fundamentals, but with the prices maybe going down a little bit again, will it be sustainable or will it last, the growth?
No, I think you're right. I think if it looks pretty volatile. So I think this is not representative of probably where egg prices are going to be going forward.
Saying that though, since I added them to the tracker, they are up 26%, and I wanted it to drop. So I think my target price is like long gone probably.
Yeah, mine says around 46.57 is a fair value, which obviously it's been trading higher than that. And it said it got up to 65
last year.
Yeah, but I don't think until it had a much bigger pullback would I be interested.
No, I said the same in my notes.
And I would imagine too that just due to inflation, like we're probably not going to get down to some of these lows. It's probably actually going to be maybe a little higher than this. Obviously not anywhere near this peak, but I could picture that, this price around here probably being somewhat stagnant going into the future, like being something that's probably going to hold for a little bit,
Yeah.
So.
And then if it does drop again, like you said, around 40, a bit more than 40, seems on the chart to be like a support level at least.
Yeah, actually, I didn't even look for what support is. Hang on a second. Let me just see what. Let me go to a little bit shorter of a chart here. Yeah. I see what you're saying. Yeah, definitely around 40-ish.
Yeah. And even there, I think I would have to. Even there, it seems a bit expensive to me. But it all comes down to. I have added this just to pay attention to how the development will continue, and to check the news and everything like that.
Yeah, if I look at this on a like a cash flow basis here, even on a long term one, you know, around $40 is, you know, because a lot of times I find if you take the cash flow and you do like a 10-year average, you can find that's somewhat of a proxy for cash in terms of stock price, like, you know, 10 times that per share count. But that's also, this is historically high, and these numbers are definitely influencing it. So to think it could get back down into the $26 range on a pullback, you know, if these last 2 years, if you just cut these out and you're looking more in this range, you know, you got book value around $20, you know, at best, you know, you might have, you know, cash flow coming in the 20s or whatnot. That's where I think I'll get more interested. And if you look historically, like let's look at a 5, you know, it drops down to 30. So, so obviously that's not a perfect evaluation of it. And I know they do pay a dividend, you know, at times. Obviously, it's based on whatever's going on in the actual business itself. But the good thing is, like we said, I mean, this company has very little debt. You know, it's more, I mean, not like no debt. It's really more just has, you know, liabilities. And they're generating a big cash position right now. I wonder what they're planning on doing with this cash, you know?
It's also very little insider buys.
Yeah, I mean, I would imagine this is probably owned. I wonder if this is family owned. Like, is there any big owner here? Actually, no. It's mostly investment firms, which is interesting.
There's the founder owns is on the insider buys. He has sold actually, but he is listed as a 10% owner there, with a lot of stock shares left.
Yeah, I want to just see what the is the board involved here at all? Where was that? I wanted to go to Adolphus Baker. Do you know what this DLNL? Did you see this anywhere? Or I'm trying to find what that is.
What was the name?
This DNNL is listed as a big holder.
I'm right now, but I haven't seen them.
Oh, it's a Delaware Limited Liability Company. Okay, it is the family. It is the family. That's what I was saying. I was like, I feel like there's got to be family involved here. The Bakers.
The Bakers, okay.
Okay, so it is which is I think in this case that's a good thing. You know, I mean, you look at it. That's between just Adolphus Baker here in the daughter's fund there. That's 55% of the company basically.
Yeah.
And then you got some institutional ownership. 50 million shares. It's pretty well covered. I wonder.
They are crushing it this year, though, compared to all the other years. But what's interesting to see is like the revenue growth is. It's not bad if you look 10 years back.
No, I mean it's doubled.
No.
And especially recently. I mean it's just because this year they've just killed it. But really, I mean, this is all due to ag prices. I mean, you know, when we go back to this chart, I mean, this is you literally double the amount you're making. You know what I mean? Like this was a little bit more than that, up to 482 at a peak.
Yeah.
So obviously they benefit. So that also, if inflation continues to come down, Does that hurt this business? And not like they're going to be hurting, but obviously they don't have this great outlook like they do, you know, from the past year.
No, and that's what I. But it's interesting to follow things. I think and see where this lands a bit and see if you can revisit.
Yeah, commodities, cyclical, ownership. I would say good fundamentals. No debt. Great dividend at times. It's a little too expensive for me.
Cash. They have cash.
Yeah, net. They're a net. So I think I'm going to give them a 4 based on all that. I'm going to throw them on deck, even though I just did that backwards.
Maybe make a comment also about the egg prices.
Yeah, obviously. All right. And yeah, I think I'm just going to use my valuation here. I think that's reasonable. You know, some people probably add the dividend on and stuff like that, but the problem is it's been all over the place. So to say what it's going to be in the future, who knows? But they do have this giant cash position. So I don't know what management plans on doing with that. Did they say anything about that in Seeking?
I don't know. Actually, maybe they have a press release.
Oh, so this avian flu actually helped them because they had to shut down. The price of eggs went up because the supply was messed up.
Okay.
This guy's saying if we see the avian flu return, that's a good thing. As an investor. So you gotta pay attention to the flu, the bird flu.
Yeah. Avian influenza. Oh, hold on. In the press release, they issue a statement on jury decision. So, what is that about?
Probably them getting sued about the birds.
Approximately 20 years ago, it's the treatment of egg-laying hens. So they probably have someone on their like animal welfare and all that stuff.
Yeah. It's probably this lady. She probably treated those birds poorly.
Yeah, you can see those hands looks a bit rough.
Yeah, she looks like she doesn't care about those birds at all. Yeah, I don't trust her.
Though? I would say I had eggs for breakfast, so that's bullish, I guess.
That's pretty bullish.
Yeah.
Yeah. All right. Price target $100 off that. For sure. There's no question there in my mind now. All right. Some interesting ones. Nothing quite cheap enough right now, but there's some good stuff to add. I thought we found some good stuff today. Sorry, I do apologize, guys, because I'm if you do keep up with these kind of things, and this is all from Wednesday, you're probably like, can we get to the weekend? So for those of you, we'll really try and work on keeping up as always, and hopefully next time we'll be caught up to the stuff from yesterday. So then that way you're seeing stuff that's really brand new information. And I could sit here for another 4 hours and go through the next stuff for the weekend. But we do have lives outside of this, so.
No, but I think that today was good, and I think I added one to the tracker, and I've seen some interesting stuff today, so that's good.
Yeah. So I do plan on doing my stream on Tuesday. The only thing is next weekend being Christmas and everything, I probably can do a stream Saturday. But Johnny, I think you'll have to host, because if I do, it'd just be from my laptop. So I'll just have to follow along with you. But it would just be me streaming from my laptop.
Yeah, but we will update on the times during Christmas, because it's a bit of a special period, and maybe we have to cancel some of the streams, but we will let everyone know if that's the case.
Yeah, we'll put it out on Twitter, and I don't know if there's a great way to do it on YouTube, so we'll probably just do it on Twitter. So if you guys, if anyone's tuning in and says, you know, if you see this in hindsight and you want to tune in for the next live stream, I would probably just check the Twitter or X handle, and then that way you'll know if we're, because that's probably what we should start doing, because sometimes, you know, we don't get the stream started till, like today we were a little bit late, so that way we can kind of put it out there and let people know it is going to happen, but it might be a different time or different day, something like that. And also with the holidays too, you know, if we get busy and we're not able to do it, we'll just let everyone know, so then that way no one's expecting one and not getting it.
Yeah.
Because I know everyone wakes up on Saturday morning and they're like, I can't wait to get to Laughing Stock. I gotta see this live stream, you know, and find and you know, just get a real good education on what's going on in the world today.
That's how I picture everything right now. That's how it is in my world.
I mean, there's really no other world out there.
Oh, and by the way, I'm expecting those diamond socks now for Christmas. Just so you know.
Yeah, they'll be there.
Yeah.
Yeah. You can consider your Christmas made.
Yeah.
Yeah.
All right, then.
I'll probably go through and update all this afterwards and get this all caught up with the new daily movers and all this stuff, because once again, all these bankrupt companies like WeWork up like 100% on bankruptcy. so they're always fun ones to look at.
Yeah.
But all right, man. You got anything else that you want to add?
No, that's cool, and we will see you on Tuesday, I guess, then.
All right, guys. Yeah, I'll see everybody on Tuesday. Johnny, if you're able to tune in, I know it's kind of late for you, but
Yeah, I struggle a bit on the Tuesdays, but I always watch them back. It's good content.
that's what we're here for, the good content. You're welcome. Welcome to the people. Thanks, guys. If anyone watches, even like we said in hindsight, wants to throw some comments or something out there, we appreciate anything. We're always trying to improve how this goes, so if you guys have any criticisms or anything that you want us to work on, please let us know. Other than that, guys, have a nice weekend. Johnny, have a nice weekend.
Thank you, you too.
See everybody next time.